Welcome to Bunnex Investment Group. In this video, we are going to learn how to catch these particular type of entries where we can actually take advantage of getting long phases of flow. So how do we do this? It's basically taking entries from yesterday's low or yesterday's high depending on the market context. How do we do so? Stick and watch the whole video so that you can fully comprehend. Firstly, we need to define the significance of yesterday's low or high within the market context. We understand that the market we trade involves big institutions. If these people buy or sell the way we do, like how you do, you just buy or you just sell, they will cause an instant crash of the market because they have access to large amounts of capital. We are saying if they just press buy or sell, they will usually, or actually they will shift the demand of a particular currency, and with that the market will definitely crash. You'd see a spike to the upside or a spike to the downside, and that crash usually will not have any economic fundamentals backing it up. So they actually have laws or rules that they follow within their trading. Therefore, whenever they enter the market, they usually split their lot portions. If they want to use 13,000 lots, it means they are going to first put 6,500 lots initially. When the first portion is injected, it will be a process whereby they sell or they buy from you. So we all know that the forex market is a zero-sum game, whereby we are saying if one is to earn money, another is to lose money. So for them to actually get filled, they need to buy from you or to sell to you. So a trap move will then be made towards the initial starting point, and will be most likely to be the lowest or highest price of yesterday's flow. We are saying when they intend to get into the markets, they do not place buys or sells the way we do. They first study how much liquidity is there in the markets. They create the first point, and on this particular first point, they inject half of what they intend to put. After that, they reverse as a way to convince traders to take that particular direction, and then when they come back to this zone, they now inject more lots so that their full intended portion is satisfied. So here's the explanation of the concept. Since we have highlighted that it will be yesterday's price, we also need to emphasize that it's not all yesterday's highs or low prices that will hold on this concept. Someone would just rush to the markets and say, I heard that yesterday's price is where they inject more portions, so I'm going to inject with them. But we are saying it's not always the case. There are points that are valid for that. So a valid point will be a pristine peak formation zone which comes after a 3-day cycle. How does a 3-day cycle be of high quality? A 3-day cycle will need to have the following properties. In this particular video, we are just going to give you one way of seeing a quality 3-day cycle. More of these qualities will be actually discussed in our courses, which you can check using the link that I have left in the description box below. So day one, we need to see a 1350 EMA crossover. It means you are going to need these EMAs 50, 13, and 200. Then day two, or flow, it's either a drop or a rise. We need to see a 50-200 EMA cross, and then day three we need to see a 50 EMA bounce and drop as illustrated below. So this is what we mean. From the initial point on day one, we need to see a corresponding 1350 EMA cross to the drop. Day two, a corresponding 50-200 EMA cross to the drop, and then day three should start as a bounce on the 50 EMA. It can as well be as a bounce on the 13 EMA. Then after that, at the end of the third day, this is where we would expect to see our magic. So we are saying here's how you need or the steps that you follow to catch the peak formation zone. Step one, we need to have 1350 and 200 EMA on our charts. Step two, we need to see 3 days of drop or rise with day one equal to 1350 EMA cross, day 2 5200 EMA cross, day 3 13 or 50 EMA bounce. After 3 days with the above features, mark the low or high of day 3. On the next day, look for a candlestick reversal pattern on the previous daily low or high price as shown below. So we are saying in this case we have this as our starting point. We had our first day with these black traces. We had a 13 in red and a 50 EMA crossover in blue. Then day 2, this was day 1. Day 2 we had a 5200 EMA cross here, and then day 3 we had a bounce of the market to the 50 and we had a drop. We are saying after you've seen these 1, 2 and 3, we need to draw a line so that on the following day, which is this day 4, we need to see a candlestick reversal pattern on yesterday's low. So basically, let's now have examples on real markets. And before we see examples, please note that we have a free Telegram channel where we share free signals and tips. Be sure to be part of that community. The link is right in the description box below. Alright, so the first pair that we are going to have an example on is Pound USD. I wouldn't want to go back in history, but to have the current moves or the current flows. On these current flows, we had this as the initial point. After that initial point, we can see we had a 1350 EMA cross, and then we had a 5200 EMA cross, and then a bounce on the 50 EMA cross. Then our point where we refer was going to be this one, right? So it should be clear to you. If you cannot explain it to someone, you shouldn't dare to touch it. So you need to see clarity by yourself and trade only what you see, right? Another pair that we can have an example is NZD against USD. On this particular pair, we had a quality cycle. Someone may ask, why are we going back and leaving this particular cycle? We are saying in this particular video, we are only going to focus on the quality using the features that we have defined in this particular video. Other techniques are discussed in our courses, which you can be part of by inquiring using the link that I've left in the description box below. We can see that this was the low, and after that low we had a 1350 EMA cross here. We had a 5200 EMA cross on this particular day, and day 1, day 2, and on this particular day we had a bounce on the 50 EMA, which was this one. After that we had this as the high of this third day of rise, and on this particular day, that is where we wanted to make a short. So basically, this is how you use yesterday's highest price or lowest price to your advantage, and it will be of high quality if you will be patient enough. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe to the video. Have a beautiful day.